Support comes from Goethe Pop-Up Seattle, presenting 55 Voices for Democracy, a podcast that brings together conversations with intellectuals, artists, and activists. Inspired by Thomas Mann's speeches produced for the BBC during the rise of fascism in Europe. Available on Apple Podcast and Spotify.
Hey, it's Patricia Murphy. It's Monday, and this is Seattle Now. So, which do you think is worse for your car insurance payments? Bad credit or a DUI? Right now, it's probably bad credit, and the state's insurance commissioner says that's not fair. He's filed legislation to stop it. In a minute, Crosscut's Melissa Santos will tell us how the problem has been exacerbated by the pandemic. But first, let's get you caught up. Vaccine shipments are scheduled to show up for distribution today, and Governor Inslee announced they could go into the arms of Washingtonians starting tomorrow. The first doses will go to health workers and people in long-term care facilities. In his Sunday address, the governor acknowledged that even with the first vaccine, there's a long way to go. He urged people to continue to be vigilant. COVID infections and hospitalizations are increasing. The Seattle Times reports that the state has shipped about 6 million N95 masks for distribution to help stop the spread of infection. And supporters of the state ban on single-use plastic bags want the governor to hold off implementing the law for 6 months. Apparently, there are supply chain issues getting the heavier bags and health concerns related to COVID-19. The ban on thin plastics was passed because they're bad for recycling equipment as well as marine life. The pandemic has upended the financial lives of millions of people. They've had to make choices that, in many cases, have negatively impacted their credit score. And here in Washington, that can cost you money on your car insurance. Melissa Santos talked to Insurance Commissioner Mike Kreidler about his efforts to put a stop to this. Melissa Santos, thanks a lot for taking the time.
Yeah, absolutely.
So you start your piece off by introducing us to a woman named Cheryl Richmond, and she lost her job as a contractor during the pandemic. What happened next?
She wasn't able to pay her mortgage for a couple of months as she was working out some arrangement with her bank to have deferred payments. And during that time, that really hits your credit when you miss a mortgage payment. So her credit went down 200 points or something like that. And, once she worked out an agreement with her bank, she thought she was mostly in the clear, at least for that. Certainly being without a job has other problems. But then in October, she got this notice that her insurance rate for her car was going up from about $400 or so to more than $800 for 6 months for that period. So that's a doubling. And that surprised her. That was a surprise that she wasn't expecting.
This is a situation that a lot of people could potentially be facing right now. There are a lot of people missing mortgage payments. Do you have a sense of how many people might be in this situation, Melissa?
I don't have a sense of it right now. I've asked the insurance commissioner a few questions like this, and they're working to come up with some data sort of at the state level. So I think we'll know more in a few months. But the thought is that a lot of people are hurting right now since we've seen these huge unemployment numbers. So people are going to have trouble paying their bills. So we might be seeing quite a bit of this during the pandemic specifically.
And this was already on Mike Kreidler's radar, and he's introduced a bill to try to stop this practice. What does it do specifically?
Essentially, it says credit history cannot be used by insurance companies to decide what you pay for your rate. For car insurance, for homeowners insurance, I think maybe some other personal policies as well, but those are the two big ones. It just basically takes us a big X to that part of the state law that lets them do that and says, nope, can't do that anymore.
Okay. And let's talk a little bit more about how this shows up for people. We already heard Cheryl Richmond's story. You gave a fascinating example about a driver with good credit versus a driver with a DUI conviction.
This is from a report that Consumer Reports put out a few years ago that says essentially that if you are a perfect driver with a clean driving record, but you have a bad credit score or a poor credit score, then you would be paying in Washington state about $700 more a year for your coverage for car insurance than someone who has a DUI on their record, but who has a good credit score. So that I thought was pretty striking as well.
Yeah, you could argue that someone with a DUI conviction might be a riskier situation in terms of liability for an accident or something going sideways on the road.
Right. And that's where this debate gets interesting, because the insurance companies say that using someone's credit history actually does correlate to the riskiness of them to insure, how likely they are to get into an accident and file an insurance claim. But that thing about the DUI from Consumer Reports, that seems to contradict that a little bit.
Do insurance companies give any indication as to how they know this is true? That there's no correlation between a credit score, or that there is a correlation between a credit score and a risk?
They're not wrong. The Federal Trade Commission, did a study that said, yeah, actually credit history does seem to predict someone's risk. So is some data to back that up. However, the same study said that people with lower credit scores are disproportionately Latino and Black, and that there might be a lot of other factors that go into that. And so that's why there's a concern that it actually is discriminatory to use these credit history in insurance rate setting.
Right, because we know that structural racism exists.
Right, that's the argument. And certainly there are a lot of reasons why people who are Black in particular, but also other people of color, have not been able to build up generational wealth. So that's what Mike Kreidler, the insurance commissioner, is saying, why we need to address this. That's a huge part of why he's pushing for it right now.
Melissa, I know in the past that I have worked on stories about people with lower incomes and poor credit choosing instead to drive without insurance, which of course could potentially lead to a cascade of other problems. And I think Mike Kreidler is getting at this when he says that this situation is a prime example of institutional racism. Tell me again how he sees this.
To be honest, he compared it routinely in the interview I did. He said this is a modern day form of redlining. That was when mortgage lenders wouldn't lend to Black homeowners. In this case, the insurers are correct that race specifically isn't something they can look at. But, if credit scores are lower for people who are Black and Latino, then that's Kreidler's argument that, okay, we're now making them pay more when they already have financial difficulties based on our system and how we've not allowed people to buy homes, not allowed people of color to do certain things. That makes it harder for them to actually have good credit. So now it ends up being racist in its effect, is what Kreidler says, even if it's not explicitly, we're going to give you a higher rate because you're Black. That's his argument.
We talked about how insurance companies are unhappy with this. Do you have an indication of how they're going to try to fight it?
Oh, they're opposing this bill. This is a bill that Kreidler is introducing in advance of this legislative session that starts in January. And already the insurance companies, the industry groups, have written and said, we are going to oppose this. They said they really value this tool to predict the risk of someone to insure, and it helps them, they say, offer discounts to people with good credit. So they are planning to fight it all the way.
And this isn't the first time that Mike Kreidler has brought this proposal forward.
No, he's done it twice before. He's proposed this in the early 2000s when it kind of first was gaining steam because credit history wasn't always used. It was kind of really picked up about 20 years ago. And then he tried again in 2010 after the last recession, for the low income reason, saying, hey, people are hurting right now. People have lost income. This is going to hurt people. But it didn't pass either time. A ban did not pass. There were some tweaks made around the edges. So he's trying again now, saying the pandemic means it's going to affect a ton of people. We also had this reckoning over race where we should be considering how this affects Black people and Latino people and other people of color and whether it's discriminatory.
Yeah, this might be a case of right time, right bill, Melissa.
That's what he's saying. He's saying this is the time.
Yeah. 2 other states are already doing this, Massachusetts and California. What's happening in California?
In California, it looks as if we have not seen rates go up. See, that's one of the insurance companies' arguments is, hey, if we do not use credit history, we won't be able to give all these people who have decent credit a discount. So they're saying a majority of people will see their rates go up. But overall, we have not seen the rates for liability insurance go up, according to, a report from the Consumer Federation of America. Liability insurance rates actually have gone down in California since they passed this, which was a long time ago. 1988 is when voters approved this there. And then we haven't seen insurance rates for other types of coverage go up nearly as fast as in other states in terms of price. So that's one argument to say, hey, it doesn't look like maybe that will happen. We won't see increases in rates for everybody or for the majority of people if this is passed. That's the argument we're hearing too.
All right, so the state legislature starts its new session January 11th. Who else is talking about this? Where will it be heard on the floor?
Well, we already have people who are sponsoring it, legislators, to, get it moving forward. But I think that it will get a fair and good hearing this year because of the concerns about the pandemic, because of the concerns about racial disparities potentially that result from this policy.
Melissa Santos is politics reporter at Crosscut. Thank you very much for your time.
Thank you.
Thanks for listening to Seattle Now. The show is produced by Matt Martin, Clare McGrane, Caroline Chamberlain Gomez, Sophie Reed, and Jason Pagano. Matt Jorgensen does our music. I'm Patricia Murphy. See you tomorrow. As this memorable year comes to an end, it's good to know we got through it together. KUOW has been able to bring you programming that broadens your perspective, thanks to our members who step up to support this work. If KUOW has been there for you at some point in the past year, consider making a financial gift to ensure a new year of telling important stories about our community. Use the link in our description to make your gift today. And thanks.